All right, 5-minute DD, ticker ARCC. This is going to be hopefully a 5-minute video on all the pros and cons that I find about ARCC after I did a little deep dive into their earnings. So I already did one video on this on ticker O. You guys should go check that one out if you are interested. But let's talk about ARCC. So it has a nice 9.64% dividend yield. That is a really good amount in my opinion. It's really high up there, but the company itself is not a risky company. So some of the pros, it's the largest BDC, business development company / corporation. And what that means is they are taking their capital or our capital from the investors, and they invest it themselves into other companies that they see growth in and that they see potential in. And then they get a return on their investment when that company grows, does well, and repays them. So it's not necessarily risky if you have a good management company, a good managed company, I should say. And so ARCC's management, in my opinion, is very strong. You can go check out more on their website. They talk about that a lot. And so that's really important when it comes to a BDC, is to find who is going to be putting your money and where they're going to be putting it and how long have they been doing it, making sure it's a well diverse company. So 12% average shareholder return since the IPO. That is just in the price. It does not move a lot. The price does not fluctuate a whole lot, but that is because you have a nice dividend, and that's what they're focused on rather than gaining, value within their shares. So we can see on this chart, this is the 5-year chart. It isn't, it had highs of about almost $22, and now we're back to 17, almost 18. If we look at the max chart, it hasn't moved a lot, only 16% all time with some crazy dips. That was when the market crashed, a couple different market crashes you can see. So it normally does just trade sideways. It is, it's trading just under the pre-pandemic crash price-wise. But the dividend is still going really strong, which is why I like this company. They have $21.2 billion in total investments and 452 portfolio companies. So they've invested in 452 portfolio companies, which is a ton, which is good because it's a lot of diversification. All of this information is coming from their earnings, which we can see up here from their Q2 2022 earnings. And so that is a lot of companies. They only are invested, 2% is their largest investment in one company, which is good. That is a lot to be invested. 2% is still pretty high, but it could be a lot worse. So I do think that the diversification is there. A $9 billion market cap, good market cap, pretty solid. 23 industries, their largest is software and services, which is 23%. In my opinion, that's great. Software and services is probably one of the top kind of industries, because there's just so much potential there for the future. And as we move more into tech and into all things that technology can do, I think software and services will continue to do extremely well. One cool thing that they put into their report is that $1 invested in the IPO date would be worth $7.68 today. A good amount of growth. I'm sure that is including the dividends reinvested. So it's just showing that over the span of 20 years, how much you can grow your money. That is a really good return. This chart shows their cumulative core earnings plus net realized gains versus their cumulative dividends. It's a little bit confusing as a chart, to be honest. I don't know why they have millions over here and then they have it 9,000. I'm not sure who wrote that, but it just goes to show you maybe I'm reading it incorrectly and it does make sense to everybody else. Drop a comment, let me know if that's true. But there is it shows overall really good growth with the dividend as well as their core earnings, which I love to see. Earnings is really important. So we're going to keep moving. Let's jump right into the cons of this company. So the dividend growth could be better in my opinion. It started pretty low, kind of has been sitting. It was sitting at the 38 cent range for a long time, for about 10 years, I want to say. And then recently they started bumping it up quite a bit. And now that's not a bad dividend. Of course, it is a good dividend yield of about 10%. But on top of that, it has been around for 20 years, so you'd like to see a little more dividend growth. So I'm not expecting a lot of dividend growth for this company, but it does already pay a pretty high dividend. So, you take the pros and cons, and then it does pay out quarterly. I would love it if it paid out yearly. Not yearly, monthly. I like monthly dividends, but it doesn't really matter if you're reinvesting it anyway, so it doesn't make a big difference to me. And then again, this is not financial advice. So overall, that's my take on ARCC. I think we're doing pretty good on time. I really do like this company, but that is not, financial advice. You guys do more DD into this company. Read their earnings reports because those are really helpful for any stock, not just dividend stocks. Any stock you can read, find their website, check them out if you're really interested in long term. So go check out my other social medias. I'll link them in the description. Go check out my video on realty income. I love that one. And subscribe if you're interested for more 5-minute DD.